Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. It's good to see you again. Hope that a lot of you were able to enjoy a very special Easter weekend with your friends and family. We're coming back this week with some pretty rough news from last week when it comes to interest rates. Man, they got clobbered again last week. Rates went up on average about 1/4 to 3/8% for most loan programs. Nowadays, there are still a few programs left where you're going to catch deals in the 4s, whether it's a purchase or maybe a refinance. But for the most part, the mortgage interest rate environment has come under heavy pressure due to the volatility of bond trading and to the sentiment that's surrounding the Fed's most recent comments. Now, they of course had come out and said they're going to have multiple rate increases of their short-term rate throughout 2022, as well as beginning to unwind their balance sheet. Now, what that technically means is that they're going to be passing back $95 billion a month of risk back onto the open market. Now, remember, we've been telling you they've been buying $120 billion a month of treasuries and mortgage-backed securities for well over 18 months. Well, now they're going to be passing back some of that risk to the market to the tune of $95 billion per month. Now, of course, that's being met with some resistance and a lot of I shouldn't say animosity, but the market is not favorable for that and really doesn't like it. And you can see it reflected in the prices that are happening in mortgages and also in the bond markets that support all of this. So what we think is happening in the future and what's coming up ahead the next couple of weeks and even the next several months is there will be price pressure. There's going to be price pressure when it comes to affordability, when it comes to your underwriting, when it comes to locking your loan, and even when it comes down to what it is you make your offer price on that home you're trying to chase down. So you have to take into context all of these variables that we do with you in the process of doing your loan. Now, of course, not all that responsibility lies on you. It's for us to talk to you about those things, but we must be having the conversation. And that's what this week's takeaway is. I'm gonna use the example of mortgage insurance. So we need you to talk to us about your situation because it may have changed since the last time we spoke. Oftentimes when someone does their mortgage loan with us on a purchase, many months or even a couple of years can pass before our roads cross again and we have a conversation about interest rate, monthly payment, or loan type. Right now, we're talking to a lot more people who are looking to do cash out because they have a lot of equity in their home, or they're looking to remove their private mortgage insurance because when they bought the house, either with an FHA loan or they bought their house conventional with less than 20% down, that came with mortgage insurance. Well, obviously the lows of 2020 and 2021 are behind us, but the market is still favorable from a monthly expense perspective for those of you who have mortgage insurance still. The rates may be in your favor still to refinance now, do some cash out or not, but be able to eliminate the mortgage insurance that's attached to your loan because the equity is there. If you have more than 20% or 20% to begin with, then you're in a position where you could refinance your current loan to fit the proper market value of your house and eliminate that monthly mortgage insurance payment. If you're watching this today and that's you, and you could be saving $200, maybe $300 or $400 or more a month, depending on your loan size, the savings could be that much even in this rate environment because you're eliminating the function of that monthly payment you make month after month after month after month. This is the ask this week. If you or someone you know and love has private mortgage insurance, please let us know how we can help you run a cost analysis of sticking with what you have versus what might your life look like if you to eliminate that mortgage insurance by doing a refinance today. Those of you who are still looking for a home, make sure you're talking to your loan officer and updating your documents so that way they have the most current information about your qualification and your affordability as it pertains to rates in the current market. And lastly, as always, please feel free to share this video with people you know and love, coworkers, neighbors, friends, and family, so that way they know what's going on in mortgage and real estate so they can make the most of it for themselves, but that they can win in 2022. Thank you so much for watching. Have a great week, and we'll see you again next week.